Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Monday morning.
Yes, sir. Yes, sir. It is Monday.
We got a lot of things going on in the job reports I want to get to a little bit later on in this segment. But before we do that, you and I had a conversation about clients that go into debt consolidation. Now, this doesn't mean like consolidating your debt with a HELOC. This means hiring a company that's going to consolidate all your debts and negotiate reduced payoffs with these investors. And how does that affect you?
Yeah. This came up because I had a customer that great guy, worked hard his whole life, fireman, right? Retiring and had managed his life really well, had an 800 credit score, had a lot of debt, right? Like different cars and what have you that he had. Everything was fine and paid. Obviously, when we transition from being a worker, right, and earning to retirement, and we think our finances are going to change, and I guess they do, right?
They do.
He got sucked into this scam debt consolidation company, and they took his 800 credit score and ruined it by not paying his bills. And it cost him money, right? And now he's trying to buy a house here. And we did end up getting him pre-approved. We did end up getting him into a house.
But he has to do something substandard in order to do it.
He had to do a lot of work to get it all fixed, and it's still not perfect. So he's paying a little bit higher rate and all those other things, right?
I will tell you this much. My experience over the last 35 years with companies that do debt consolidation to help you improve your credit score will do more damage than good. I don't like them. I don't advise them. I think they're horrible, but they sure do convince a lot of people. And you see them on TV and it's, we saved all these people. It's just not true. That's, as a matter of fact, some of the biggest companies around are some of the worst that I've seen. But you have to remember, if you've got a debt to be paid, a credit card debt, a car loan, and it's being paid on time, but you feel like I'm just a little overloaded with too much debt, like I took on more than I wanted, so I want to consolidate everything. The only way that creditor is going to negotiate with you is if you're not paying. If you're paying it, they're not going to negotiate anything with you. So what happens is these debt consolidation companies go, quit paying all your debts. We'll pay them for you. Well, when we feel like it, once they negotiate. So now your credit goes from maybe great or even okay, or even if it's not that great, it's going to get worse. It's going to get a lot worse before it gets better. Then they are hoping that these companies will negotiate or that they will dispute items on the credit. Now, disputing an item that is truly erroneous, meaning it's false information, is easy enough to do. You don't need a debt consolidation company to do that. You prove that you made the payment on time and they remove it. It's that easy. Now, if you can't find your records, or you're like, I'm pretty sure my husband paid that bill on time, you don't have empirical data. But if you've got the data to show that debt was incorrectly reported, that's easy to get removed. But now you stop paying all your bills and then they dispute. So this is another trick. When an account is disputed on your credit report, that account is removed from the scoring model until it's resolved. So let's just say you had a credit card that was maxed out and it was costing you 50 points. Okay. It was dropping your score by 50 points because it was maxed out. Now, what's worse, 50 points or 150 points? Because now it's in collection or it's being not paid.
Right.
And how long does that take? So then they hope that they're going to negotiate. But if the credit company says, look at, you owed the money and we've proven that you owe the money, pay the money back. So now this credit consolidation company is just disputing everything on your credit. They're trashing everything in hopes that they will be able to renegotiate. Now, eventually, if you don't make your payments on time for a long enough period of time, they're going to negotiate. But what did that do to your credit?
Yeah. Yeah, exactly.
You'd
Right.
been better off pulling money out of your 401k and paying the penalty on it to wipe out your debt. You have to remember, if you can't have money in savings and have money that you owe in credit and consider that you still have that savings isn't your money if you owe debt.
Hmm.
Let's wipe out the debt, do the best you can with it. If it affects your 401k, that's fine because the net, you're only making what, 4.25 on your 401k and you're paying 25% interest on your credit cards.
Yeah.
Give your head a shake. It makes no sense not to pay it off.
Yeah, exactly.
So my
Exactly.
point is, don't go into consolidation. If you've got equity in a home or you have money in a 401k or IRA, let's look at another avenue to clear that up so it doesn't negatively affect you. You're not going to get companies just to wipe out your credit because they're nice.
Nope. Nope.
They don't operate that way.
Nope. 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 Yeah,
Next,
that's good stuff. So we got a lot of news on interest rates.
we do. So
Wait, what do you mean they're going to go up?
is that crazy? So the Wall Street Journal posted just the other day that they expect interest rates to go up through the year. Now, are they going to go up high? No, they expect them to go back to about 6.5%. They've been settling around 6.3%. They're expecting them to go up. Why would that happen when we're expecting 2 more Fed cuts this year? Well, there's a couple of reasons. First of all, inflation. And the inflation numbers are definitely affecting it. But I believe that the way that the Fed reports inflation is not correct. They're not taking into consideration all of the different aspects that go into it. And part of it are financial fees. So once you add up all the numbers, inflation's really at about 2.1%, but they're saying it's about 2.8%, and they want it closer to 2%. That's going to drive interest rates up on the bond market. That's going to drive the bonds up. That's going to cause interest rates to increase as time goes on. So, when is the best time to get your best possible interest rate? I can't tell you how many times you and I have talked about it on this show. I can't tell you how many times we get phone calls going, why didn't interest rates drop 1/4 of a point when the Fed dropped the Fed rate? Because you don't understand the correlation between the Fed, bonds, and interest rates. So here's the reality of it. We're probably going to get another Fed cut on October the 29th. The best rates are leading up to that. So I'm going to say that the loan arranger's best guess is going to be somewhere between the 17th, maybe even the 13th of October through the 27th. Those are probably your best interest rates leading up to the cut. If you wait for the cut, you're probably going to get spanked. Now,
Right.
we may not have another swing at it in December because mid-December is another Fed cut that's predicted, possibly another 1/4 of a point. But those rates get built in advance of the actual cut. So don't think that when the Fed makes the cut that interest rates get better. If we look at a bond chart right now, we can clearly see what interest rates have done since the Fed cut the Fed rate. So there's the Fed cut rate. They stayed flat for a little bit here, and then bonds went down, down, down. Now we want these to be up.
Right.
Look what happened before the Fed cut. Look how good we did before the Fed cut. And there's the Fed cut. We're getting better and better and better and better. Fed cut. Worse. So it happens every single time. Fed cut. This was before the Fed cut. And then we had the tariffs come out. And then things started to get a little bit worse. Then they got better, much better, way better. Then the Fed cut and we get worse again. So the point is here, it's leading up to the Fed cut that you get the best interest rates.
That is really, really good. Keeping an eye on the market. So we have that cut that's supposed to, or the meeting that's supposed to happen in October, right?
That's right.
And then we have another
This
one.
week we got new home reports coming out. We got joblessness claims coming out this week. JOLTS coming out this week. The PMI index, the Chicago index, it's loaded, and we can't bore you guys with all the indexes that are out. But I'm going to tell you something. It's a rocky road heading up. So it's a really good time to not play the float game too long. If rates are okay, they're better than they were. They're just not as good as they were 2 weeks ago.
Right.
But they're better than they have been. So if you're okay with a 6.3 to 6.5 rate, you should be able to lock in your rate and do it. On a refinance, if you're north of 7%, get your application into me now so we can watch the market. Those refi opportunities usually only last from 1 to 3 days. That's the people that get the best are ready to go. The people that don't get the best are like, yeah, I meant to apply. I kept putting it off, but now I'm applying. Why can't I get that rate that it was 3 weeks ago? Because it doesn't exist anymore.
Yep. Yeah. Good deal, man. Good deal.
For buyers, I want to talk a little bit about buyers because I was looking at the local market for housing, and there's 3.5 sellers for every one buyer right now. 3.5 sellers for every buyer. That tells me this is a buying opportunity. This is an opportunity for you to get in and negotiate some closing costs. You and I were talking about builders that are paying $35,000, $36,000 in closing costs. My Trinity family builders, that's what they pay in closing costs. They're going to do whatever they can. So how does a typical seller on a resale compete with that? You have to, first of all, make your house look like a builder house. It doesn't need to look like a crime scene. Okay. No chalk marks. Get rid of declutter. And you're a professional at helping people do that. Oftentimes people think they need to spend tens of thousands of dollars to get their house fixed up on the market. Sometimes it might be decluttering, right?
Definitely. It's almost always decluttering, and then usually simple things like cleaning and painting.
Right.
You know,
So
that gets you 80 to 90% of the way there.
And if you go into a builder home, you see the gray tones, you see minimal, you got no pictures on the wall other than art. You've got no family stuff. You don't have the kids' crib sitting in the corner of the room, the dog crate. Everything's got, if you want top dollar, you got to position yourself to look like top dollar.
Absolutely.
Right? So what are 3 tips you could give people that want to sell their home and get top dollar right now?
Three simple tips, right? Definitely clean and declutter. Those are your number one things, right? Don't have obvious things that need to be repaired, right? If there's a repair that's needed, address it ahead of time, right?
Okay.
And probably the third tip, unless you're in an area where all the homes are basically cookie cutter, if you're in a neighborhood where there's 3 models of homes and they're all the same, one of the smartest things that you can do is get an appraisal of your home before you list it. Because if you list it at just below the appraisal amount, you'll actually get more traffic and you'll get buyers coming in quicker than you will if you say, I'm going to go a little bit above and give myself room to negotiate. Right?
So have you seen people pay more than ask price when the house is priced slightly under value and it ends up happens all the time?
It still happens even in this market right now.
It happens right now in this market, and it's actually a smart way to put your house on the market. The other thing is if you've got a builder in your community that's paying $35,000 in closing costs, be prepared to pay some closing costs or you won't compete with the builder.
Yeah. Yeah. The advantage you have as a house that exists, that's not, a builder, is that it's there. They can move in.
Yep.
You can close in.
It's move in ready. But
30
you
minutes,
have to
45
position
minutes,
it.
whatever.
Price it right, declutter it, do some cosmetic work to it. You don't need to spend a lot of money. Those are the tips for the day. Thanks for joining today. I appreciate you. And anybody that has any questions for Tom or I, you can reach us with all the contact information below.
Bruce, make it a great week.
You too.